Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. And today we are going to talk about one of the biggest questions in everybody's mind, Netflix. Yes, to buy or to sell or to even hold whoever bought it before. So I had a lot of questions in my Patreons group and I did answer them, but of course I didn't make a video about it. So I thought that let's make a short, crisp video to the point and let you guys know my opinion, and if that helps you guys out, then I'll be more than happy. So let's not make this video too long. Let's just go straight to the point. So to answer the question, should we be buying Netflix at this point, or should we be selling, or should we be holding Netflix, whoever bought it, we have to look at the earnings report and know and see what is happening with Netflix. And for that, I have opened the letter to the shareholders provided by Netflix on 19th of April on 2022 after the earnings report was released. So it says, our revenue growth has slowed down considerably, yes, as our results and forecast shows, which we will get on to in a minute. And the reason behind this is, of course, high competition, which they say right here. When including large numbers of households sharing accounts combined with competition is creating revenue growth headwinds. So this is creating a large amount of headwinds for their revenue growth. Of course, there's a huge competition, and I've seen many people now also in my friend circle that they're also subscribing to Hulu, Disney, Amazon Prime. Amazon Prime has some great shows. So people are also subscribing to those channels. They have not unsubscribed to Netflix, but it could be like, for example, if you think like this, that if, for example, Money Heist, if somebody really loved Money Heist, they just watched Money Heist, and if I scroll down on Netflix, I personally feel there are only few shows. There have been many movies or shows out there which have not so good ratings, and I don't know, this is just my personal opinion. They are just taking on some random movies and shows with really low IMDb ratings. Okay, if we don't talk about the ratings, if you just watch the movie, it's nothing. There is no storyline, nothing, whatever. Anyways, I'm not a movie critic, but yeah, this is my personal opinion that their quality of content is reducing, and people might unsubscribe, and then they subscribe later when they feel that okay, this show is coming on and it's a great show, so something like that. Anyway, so the big COVID boost, of course, they also say, to streaming obscure the picture until recently. And of course, they are now saying also in this report that they will work on reaccelerating the revenue growth, yeah, which is okay. Now let's get on to the numbers. So if we just scroll down on this letter to shareholders. So let's first check the revenue growth. So we can see that the year-over-year percentage growth for Netflix for Q1 2022 was just 9.8%. Guys, for a business like Netflix, a revenue growth of 8 to 10% is a no-go for me, in my opinion. And the forecast for Q2 2022 also is just 9.7%, not increasing, but rather declining. So the revenue growth for Q1 2021 was 24.2%, and these were the numbers what I would like to see, guys, for a business like Netflix. But 9 to 10%, 8 to 10% is a big red flag for me. So this is the first reason. Now let's see at the operating margin. We can see that the operating margin for Q1 2022 was 25.1%. Again, for Q1 2021 was 27.4%. And guys, if you have watched my earlier videos, operating margin is one of the most important factors. It's one of the most important margins in my opinion, because this decides the real profitability of the business. This shows how the business is performing, how the operations from the business are performing. So this, if I see this is declining, of course 25%, 20 to 25% is still a good operating margin in my opinion, but I see that it is declining, and this is a red flag for me. So we can see that from Q1 2021 to Q1 2022, it declined by 2%, and the forecast is even worse. So 21.5% is the operating margin forecast for Q2 2022. This is the second red flag in my opinion for Netflix right now. Okay, now the third most important metric, which is one of the biggest red flags in my opinion, and the reason why the Netflix stock crashed like hell was, first of all, let me explain you what happened. So the analyst predictions were that Netflix will have a subscriber growth count of 2.5 million subscribers. But instead what happened? Netflix lost 200,000 subscribers. Not growing, not stagnant, lost this was a big punch for the bulls, yeah, and even the bears could not imagine this scenario. So this was a huge surprise for everyone, yeah, and a big blow to all the bulls. So this was like really unpredictable, and this came out like a big negative surprise for everyone, for all the investors of Netflix, yeah. So anyways, so this big subscriber count change of 2.7 million, yeah, subscribers, and this unpredictable like change decline, this was huge for Netflix. And now what is happening is that for 2022 quarter 1 2022, they had 221 million subscribers, but the forecast is worse. For quarter 2 2022, they are predicting to lose further 2 million subscribers, and this is another big red flag for me, and this give me another reason not to pay for such high multiples for Netflix, which we'll discuss further in this video. So these were the 3 red flags for now. Now let's look at some positive things. So we can see that the free cash flow is at $802 million, yeah. Now this is quarterly, okay, so this would be around 3.2 billion dollars full year, and this is still good, yeah. So they are still in positive free cash flow. Like when I say that in time of crisis, like in such economic crisis right now, I would prefer businesses which are in positive free cash flow. But guys, remember that this is not the only criteria. Of course, I love businesses with positive cash flow, future positive cash flow, and with a good multiple of price to free cash flow. But we have to look at the full business. So we can see that they will be, of course, in positive free cash flow, but we can see that the revenue is declining. Yeah, their operating margins are declining. Of course, their subscriber paid membership count is declining. So I'm not saying that Netflix is dying. No, not at all. So please don't panic, and please don't take it as my statement that I'm saying that Netflix is a no-go and stuff like that. I'm just giving you my opinion and what I think about Netflix. So let's now have a look at their income statement. We already had a look at their summary, but let's have a general look at their income statement. So we can see that the revenue grew, yeah, from March 31 2021 to March 31 2022, but like we saw, this is nothing. 8 to 10% increase is not acceptable for such a big business. And then operating income also increased, but of course the operating margins are declining year over year, compared to previous year. And the net income has decreased, as we can see right here, that their net income from 1.7 billion has decreased to 1.59 billion dollars, yeah. And this is again another thing which is a red flag, yeah, for now. See, we cannot really predict a business with 1 year of performance, yeah. We have to give time to a business. This is my opinion. So exactly that's what I'm trying to say, that I'm not just totally ignoring Netflix, yeah, but I'm just thinking that this is not the right time to buy in Netflix for now, because let's see further. So before we go on to the reasoning, let's have a look at their balance sheet as well. So their balance sheet looks quite good. I'm really happy with their balance sheet, because their total assets have been increasing and their total liabilities have been decreasing. As we can see also that they don't have any short-term liabilities for now. They don't have any short-term liabilities. So they just finished off their coming 12 months current liabilities. And we can also see that their total liability and stockholders equity is increasing, which is quarter over quarter, which is really good, yeah. That means their balance sheet is improving, which is what I would like to see for a business. And the fundamentals for the balance sheet are quite good, yeah. So they are not going anywhere financially. They are financially strong in that case. So now let's have a look at their cash flow statement, and we can see that the net income of course decreased. We already saw that. The other thing which I would like to see is the cash flow from financing activities. Now, cash flow from financing activities, I look into especially for growth businesses. Netflix is a combination of growth and, let's say, value investment. Now it is becoming, let's say, a value investment. So in this case, Netflix is doing quite good. So they don't have any cash flow from their financing activities. They're generating the full positive organic cash flow from their operating activities. Instead, they're actually paying off their debt. We can see that it's in minus. So this is good. This is what I would like to see. And this is what I wanted to just go through to give you guys a gist of what's happening with Netflix. So we already covered the main reasons what happened. So now to answer this question, why I'm not buying Netflix now, because, and this will be the answer of that because which we covered earlier. So for that, let's have a look at some multiples. So the current P ratio is sitting at 19.41, but I'm not looking at the current P ratio for now. What I'm looking at instead is the forward P ratio, and with the current market cap, I would still be paying around 31.85 of forward P ratio, which I'm not comfortable with paying for Netflix with the declining revenue and especially losing on their members for the coming quarter as well. So I'm definitely not comfortable paying a 31 forward P ratio for this business right now. And apart from that, like I said, that I'm a big fan of cash flow businesses. Yeah, the businesses which are providing a good cash flow, positive cash flow, especially in the time of crisis like now. So we can see that if we go on to the summary, we can see that the current market cap of Netflix is sitting at $96.94 billion. Yeah. And we saw that the quarterly cash flow for Netflix was around $300 million. So the yearly cash flow becomes around $3.2 billion if they can maintain this positive cash flow of $300 million. So I'm just assuming. So if we just divide the market cap with the cash flow for full 2022, I would be paying around 30. Price to free cash flow of 30. Again, that is a really high price to free cash flow to pay for Netflix. Of course, Netflix is considered as a growth business, but in my opinion, I am definitely not comfortable enough to pay a forward price to earnings ratio for a business like Netflix of around over 30 and a price to free cash flow of 30. Now, many people would argue with me, hey, come on, Netflix is a growth business. You should be comfortable for paying such a multiple for a growth business. You are paying over 150 price to earnings ratio for Tesla, over 200 price to free cash flow for Tesla. Then why not just the price to free cash flow of over 30 and price to earnings ratio of over 30 for Netflix? Guys, where is the growth? 8 to 10% year-over-year growth is not a growth business. So that's why currently, I'm not saying that I'm ignoring Netflix altogether, but currently I'm not comfortable in paying for such a multiple of over 30 for forward price to earnings ratio and forward price to free cash flow, especially for a business which is predicting on losing subscribers, who has a declining operating margin, declining revenue. I am not comfortable right now. Yeah, of course, they are a cash flow generating business, but the other fundamentals are not inclining for me towards this business. So that's why I am now, for now, not ready. And that's why, even though it crashed 30%, from its previous week price, I'm still not comfortable enough to buy Netflix at these prices and pay for these high multiples. These multiples are still high for me, especially after the Q1 earnings report. Yeah. And the forecast, depending upon the forecast as well. So these multiples are high for me. I would look into Netflix if the forward price to free cash flow drops below let's say 20, then I would be comfortable. And also if the current price to earnings ratio drops below 10, then yes, I might think of buying Netflix. And of course, Q2 reports would give us some more insight. So I'm not taking any hasty decisions right now. And I hope this helped you guys out to know my personal opinion and to make up a decision on what you want to do. I'm not a financial advisor, guys, and I don't want to influence your decisions and then you just blame me. So please be careful with your own decisions. It's your own money. I'm not responsible for your money. So just wanted to give you guys my opinion, and that's it. So I'll see you in the next one. Until then, stay safe, stay happy, and ciao.